Start by understanding what a tax appeal is. In Malaysia, a tax appeal is a formal process that allows taxpayers to challenge an assessment or decision made by the Lembaga Hasil Dalam Negeri, also known as LHDN or IRB, under the Income Tax Act 1967. If you ever feel that your tax assessment is incorrect, or you disagree with the amount or the way it was calculated, this process gives you a legal avenue to seek a review. Whether it's the original assessment, an additional assessment, or even a protective or advanced assessment, the tax appeal process is there to ensure your voice is heard and your rights are protected. Legal basis for tax appeals in Malaysia is set out in sections 99 to 103 of the Income Tax Act 1967. This means the process is not arbitrary, it's governed by clear rules and procedures. Appeals can be made at several levels, starting with the Director General of LHDN at the objection stage, then moving up to the Special Commissioners of Income Tax, and if necessary to the High Court, Court of Appeal, and even the Federal Court. This multi-tiered system ensures that taxpayers have multiple opportunities to present their case and seek justice. You might wonder, when should you consider filing a tax appeal? There are several valid grounds. For example, if you believe your tax was incorrectly assessed, or if your income was either overstated or understated, you have the right to challenge it. Maybe you were denied certain reliefs, rebates, or deductions that you believe you're entitled to, or perhaps there were procedural errors in how your assessment was handled. Even disagreements over the interpretation of tax law can be grounds for appeal. The key is to know your rights and act when something doesn't seem right. First step in the tax appeal process is to file an objection with LHDN. This must be done within 30 days from the date you receive your notice of assessment. Once your objection is submitted, LHDN will review your case. They may allow your objection in full, partially allow it, or reject it altogether. It's important to act quickly and provide all necessary documentation to support your case at this stage, as this sets the foundation for any further appeal. If your objection is rejected or only partially allowed by LHDN, you can take your case to the Special Commissioners of Income Tax or SCIT. This must also be done within 30 days of receiving LHDN's decision. The SCIT acts as an independent tribunal, hearing evidence and arguments from both sides. This stage is crucial as it gives you a chance to present your case in detail and have it considered by an impartial body. If you're still dissatisfied after the SCIT decision, you can escalate your appeal to the courts. The process starts with the High Court and, if necessary, can move up to the Court of Appeal and finally the Federal Court. Each level provides a further opportunity to have your case reviewed, ensuring that every taxpayer has access to justice and due process. However, each step comes with its own procedures and timelines, so it's important to stay informed and prepared. One of the key features of the tax appeal process is your legal right to challenge any assessment. This right is protected by law, and the system is designed to ensure fairness for all taxpayers. Whether you're disputing the amount of tax, penalties, or even procedural errors, you have the right to be heard and to present your case at every stage of the process. Timelines are critical in the tax appeal process. For each stage, there are strict deadlines, usually 30 days from the date of the relevant decision. Missing a deadline can mean losing your right to appeal, so it's essential to act promptly. Always keep track of important dates and ensure your documents are submitted on time to avoid unnecessary complications. Tax appeal process is structured in clear stages. It starts with an objection to LHDN, followed by an appeal to SCIT, and then, if necessary, judicial appeals to the higher courts. Each stage serves a specific purpose and provides a new opportunity to present your case. Understanding these stages helps you navigate the process more effectively and increases your chances of a successful outcome. Evidence is a cornerstone of any successful tax appeal. You have the right to submit documents, records, and legal arguments to support your case. This could include financial statements, receipts, contracts, or any other relevant paperwork. The more thorough and organized your evidence, the stronger your appeal will be at every stage of the process. Scope of a tax appeal is broad. You can challenge not just the assessment itself, but also additional taxes, penalties, or even procedural errors made during the assessment process. This comprehensive approach ensures that all aspects of your case are considered, giving you the best chance to correct any mistakes or injustices. It's important to note that filing an objection or appeal does not automatically suspend your obligation to pay the assessed tax. Unless you are granted a stay of payment, you must pay the amount due while your appeal is ongoing. This rule is designed to ensure compliance, but it also means you need to plan your finances accordingly during the appeal process. The tax appeal process acts as a legal safeguard, ensuring fairness and compliance for all taxpayers. It's not just about challenging decisions, but also about upholding the integrity of the tax system. By providing a structured way to resolve disputes, the process helps maintain trust between taxpayers and the authorities. Documentation is absolutely crucial in a tax appeal. Every claim, objection, or argument you make should be backed by solid evidence. This includes financial statements, receipts, contracts, and any other relevant documents. Proper documentation not only strengthens your case but also speeds up the review process, making it easier for authorities to understand and evaluate your position. Awareness is key. The tax appeal process encourages taxpayers to be aware of their rights and responsibilities. By understanding the procedures and knowing what you're entitled to, you can better protect your interests and ensure that you're treated fairly throughout the process. Let's talk about Form Q. This form is used when you want to appeal to the Special Commissioners of Income Tax after your objection to LHDN has been rejected or only partially allowed. Form Q serves as the official notification to SCIT that you wish to have your case heard. It's governed by sections 99 to 103 of the Income Tax Act 1967 and must be filed within 30 days of the objection decision. Filling out Form Q, you'll need to provide several key details. This includes your personal or company information, assessment details like the year and notice number and the amount in dispute. You'll also need to include the outcome of your objection, clearly state your grounds for appeal, and attach supporting documents such as financial statements, receipts, or evidence of claimed reliefs. Finally, don't forget to sign the form, either as the taxpayer or through an authorized representative. Remember, Form Q must be filed within 30 days from the date of the objection decision. Missing this deadline can jeopardize your right to appeal to SCIT. Mark your calendar and prepare your documents early to ensure you meet this important requirement. If you wish to appeal a decision made by the SCIT to the High Court, you'll need to use Form N. This form serves as the formal notification of your judicial appeal. It's governed by Sections 103 to 107 of the Income Tax Act 1967 and must be filed within 30 days from the date of the SCIT decision. Form N is your gateway to having your case reviewed by the judiciary. Form N requires you to provide information about the appellant, including name and identification or company number, as well as the respondent, which is LHDN. You'll need to reference the SCIT decision, including the date and decision number, and summarize the ruling. Clearly state your grounds for appeal, specify the relief you're seeking, and attach all relevant documents, including a copy of the SCIT decision and supporting evidence. Form must be signed by you or your authorized legal representative. Just like with Form Q, Form N must be filed within 30 days of the SCIT decision. Timeliness is crucial, so make sure you gather all necessary documents and submit your appeal promptly. Missing this deadline could mean losing your chance to have your case heard in court.